You open your brokerage app and literally everything is red. SPY's down, QQQ's down, DIA's down, your biggest position down 10% in a week. That high beta tech stock you were just sure was about to explode. It did, but it went the wrong way. And now you're asking yourself, is this the crash? Should I sell? Is this 2008 all over again?
And meanwhile, the headlines are screaming recession. Your group chat is panicking, and Twitter gurus are either flexing profits or yelling, I told you so. So today, we're talking about what to actually do when the market crashes. Now, before we fully dive in, it's important to note that this is not financial advice. We are not brokers or financial planners. This is for educational and entertainment purposes only. So please do your own research before you make any moves with your money.
Yeah, and before we even get into strategy, let's be honest. Investing, it's not easy.
Mm-mm.
We're learning this every single day.
Yeah, and I mean, nobody talks about the emotional swings. The highs feel incredible. You hit a green week and you're like, okay, I get this. I'm built for this. And then a red week hits and suddenly you're questioning everything.
Dude, Twitter will have you thinking you're supposed to be making hundreds, if not thousands of dollars a day. And I'll be honest, I'd love to consistently average $20 to $50 a day to start. That's real, that's sustainable, that feels like it's building a skill.
No, exactly. The internet shows highlight reels. It doesn't show the months of learning, the blown trades, the shipwrecked accounts, the discipline reps. I mean, we're two guys figuring this out in real time. And if you're feeling the pressure right now, you're not crazy.
Yeah, so let's zoom out. If you're here, if you clicked into this video, you're probably nervous about all the chatter about a market correction, right? What is a market correction? Well, a correction is typically a 10% or more pullback from recent highs. Now, unlike what the Twitter gurus might tell you or what the comment section of other YouTube videos might tell you, that's normal. That can happen and regularly happens, even in bull markets.
And markets don't go straight up forever, right? I mean, that's kind of what we've seen. When price gets extended, especially into major resistance, it starts to cool off. Obviously, we all hope for a little bit more time, but SPY and QQQ are very much in overextended territory recently, and that doesn't mean that the world's ending. It just means that we might be due for a reset.
Resets shake out weak hands. They don't automatically signal collapse. The smart money, banks, hedge funds, non-retail traders, they can make a killing or at least reset their positions by taking advantage of fear or greed in volatile markets. So, how do you avoid becoming liquidity for the big guys? Chase, let's
Hmm.
talk about what specifically not to do in these cases.
Yeah. So, I mean, let's talk about not panic selling. The worst thing that you can do in a crash is panic sell. Fear spikes. You want to stop the bleeding. You think this is the end. But here's the critical distinction: you have unrealized loss versus realized loss.
An unrealized loss means you're down, but you haven't sold. A realized loss means you're locked in. You turn temporary volatility into permanent capital loss, which sucks.
Yeah. And I mean, that volatility feels permanent in the moment, especially if you're looking at it every waking minute of that morning as everything's hitting. Now, that doesn't mean that you never cut your losses. I mean, it doesn't mean that you're making emotional decisions, but you do have to be smart when it comes to it.
Yeah, absolutely. And I think that leads us to the what to do section, right? If you are building a game plan for whether it's a market in good times or in bad times, a lot of times this will be something that you can follow. So, number one, let's start by having a plan. If you don't have a plan when things are green, you definitely won't have one when things turn red. You need to be studying charts, understanding structure, knowing your entry, knowing your exit.
I think the biggest thing for me was that you need to know that if you're going to go into a trade, you can only trade what you can afford to lose, right? If you're trying to get into this get rich quick, you're seeing everyone have some big winners on Twitter, you're going to get humbled super fast. I mean, the market humbles the noob that's just trying to get in and make a quick buck. So this is a long game. The second thing to do is to not trade on emotion. If you can't sleep because your position's down, then you're probably oversized. You're probably thinking a little bit too emotional and not as analytical as you could be.
Yeah, if you're checking your phone every 5 minutes, you're probably too emotionally attached, right? And it's a good thing to care about whether your positions go up or down. You're not just lighting money on fire. But what you do want to do in these cases, you want to make sure that your size is reduced, that you're not going in too heavy. If you are worried about the money dropping at all, set a stop loss. Make sure that you cannot physically lose more than you are willing to if the trade turns south. And then step away before hitting buy or sell. I think one of the things that a lot of us get sucked up into is watching those daily charts, thinking, oh, well, if I miss it now, it's never coming back. I'm going to miss this green candle that, is the beginning of the rest of the future. And that's simply not the case.
Going to the gym during those red mornings or when you got a tip and you were expected to see something green, I think that's been the best mentally resetting time is just stepping away from the computer, not looking at it, and just remembering like, hey, we had a resolution at the beginning. I'm going to stick to it. It was said that if you can't control your emotions, then the market's going to control your money, and that's happened a lot this year.
No doubt. Well, the third thing is to look for market rotation, right? If you are somebody that wants to swing trade, or if you want to at least know where the market is moving their money to, then figure out where it's going, right? It doesn't disappear, right? When SPY or QQQ sells off, that money is not just being evaporated, it's going somewhere else. So when growth cools off, capital moves somewhere else.
Yeah, and we've seen weakness in the mega caps here recently. The Mag 7 names like Nvidia, Amazon, Apple, Microsoft, all these kind of companies that now that doesn't mean that they're dead forever. It just means that there's suddenly a leadership shift.
Yeah, energy, consumables, defensive sectors. That's where the money is moving right now. Is tech experiences a cool off, even amidst great earnings reports for these Mag 7 names. They're not going anywhere, right? But the market clearly is saying they're trading at too high above their profits. The evaluation does not meet the actual production. At least that's what the market's saying. And so when that fear rises and starts to build, money then ultimately looks for stability.
And I think for guys like us that are in our late 20s, we're trying to create wealth. I feel like more often than not, we're looking for long term type of holds and not
Mhm.
the quick little day trades. And so the fourth topic or idea would be that the long term mindset wins here. That wealth isn't built in one trade; it's a steady investing. You've got dollar cost averaging, just the small chunks consistently over time. Whether that's adding to your position every Friday, trying to buy as many dips as you can. Obviously, with financial responsibility, right? There's I think what we've seen here recently has been like, well, I'm tapped into every single dip. How many more dips can I actually buy? And so having a game plan for the long term of like, you know what, every Friday I'll throw a little bit more into that position just to average down.
Yeah. Well, and I think over time, the best trades, the winners in this industry, they're compounding their gains, right? And so compounding doesn't care about your feelings, it does not care about your emotions. The traders that have a plan that stick to it, they're the ones that are going to win consistently. And the market ultimately rewards having plans and it rewards patience. So, the last thing that we'll leave you with here for this game plan, be okay doing nothing. And Chase, this is something that I think maybe the hardest of all the disciplines to master. It is definitely underrated. Truly, sometimes the best trade is no trade at all.
Yeah, no, and I think that there's actually some peace to that of knowing that I'm allowed to step away to do nothing and that be perfectly fine. Like you're not being penalized for being uh an uneducated trader because you're not actively doing something in that moment. The best traders know when to just sit on their hands and wait out the market. Wait for confirmation, wait for that structure, wait for edge. You're not getting paid for your activity. The amount of hours that you're staring at your screen, you're getting paid the accuracy of those trades and when to get in, when to get out. The last one, it was have a life outside of the market, which kind of goes to the whole doing nothing. It's nice to be able to go to the gym, pick up a hobby, do something outside of just staring at your winnings and losses. If your whole identity is going to be green and red candles, you're going to burn out. You're going to end up going to bed unhappy, like you said earlier. And this is supposed to be something for security, something for your future and not something that's going to add stress to your life.
Yeah, I mean, think about it like a normal job, right? The more you obsess about it, the more that you just grind day and night, working long hours, well, that wears you out faster, right? And for a lot of us that have normal jobs or 8 to 5s, trading is not your full-time job. And so if it's burning you out like a full-time job is, then you're probably going to get discouraged. You're probably going to want to quit. So for you, like you said, going to the gym, building something, spending time with family, basically just go touch grass, right? Have something that allows you to step away, to get perspective, to realize that life is not green and red candles, that if things are going up, that it's not, just to the nth power. And if things are going down, it's not the end of the world. Perspective ultimately is going to keep you grounded, which I think brings us to the conclusion here. And the whole reason why people clicked into this video, whenever the market does crash, quote unquote, or correct or reset, it's going to feel scary, right? No matter how prepared you are, there is going to be that tug that, okay, everything's going red. Am I prepared? Am I ready? How long will this last? What does this mean? But they ultimately create opportunity just like the market going up. There are ways to make money as the market goes down. They expose impatience from others, they reward discipline. And that's ultimately what's going to protect and keep those folks with a plan in the best scenario.
I think this is a classic forest through the trees situation of letting your present circumstances of maybe a tough market dictate your emotions in the short term when we're trying to remain steadfast in the research that has been done for the long term, right? Getting into good stocks that we know have proven to do well, that have gone up over the years. And I think you can look at historical precedents for some of these, bigger tech names, like you said, that, yeah, they all had their dips. They had pullbacks where in that moment, somebody was probably really scared. But at the long term, you see, you know what? It recovered. It did even better. So let's zoom out. Let's have a plan, remain unemotional, and then always think long term.
And remember, corrections transfer wealth from the impatient to discipline.
I mean, we're still learning. You and I talked about how this was kind of a learning year for us.
Mhm.
We're growing, and if your goal right now is just to consistently make like $20 to $50 a day and build skill, that's not small thinking. That's a foundation for building, and that's only going to compound over time.
And those foundations build freedom. That's exactly what you and I are chasing. That's what our audience is chasing. And so, managing those disciplines, building a foundation, that's what springboards us into success. If you found this video through the YouTube algorithm, consider subscribing to Life Lessons Capital. It's two guys that are just trying to make the most of our life, share the lessons that we're learning, what we're working on. And we'd love if you would join us along the way. So, with that, we'll see you in the next video.